How to interpret financial news. Did you know that real GDP growth forecasts for 2024 have been revised downward? While this might seem complex at first, understanding such updates is essential for traders. Financial news is one of the most valuable tools you can use to navigate the markets effectively. In this lesson, we'll discuss how to read, interpret, and apply financial news in your trading strategy, helping you make more informed and timely decisions. Importance of financial news in trading. Financial news moves markets. Whether it's a new economic policy, a company's earnings report, or geopolitical events, financial news helps traders anticipate market trends, identify trading opportunities, and manage risk. For example, a strong earnings report from a major company can send its stock price soaring. A high inflation report might signal higher interest rates, affecting Forex and bond markets. A political crisis can shake investor confidence and lead to a market downturn. Staying informed keeps you one step ahead in the market. Financial news terms to know. Here are some key terms that will help you understand market updates faster. Basic financial and market terminology. Bull market, a market where prices are rising or expected to rise. Bear market, a market where prices are falling. Volatility, the frequency and intensity of price fluctuations. Liquidity, how easily an asset can be bought or sold without affecting its price. Earnings per share, EPS, a company's profit divided by the number of its outstanding shares, indicating profitability. Market capitalization, the total market value of a company's shares. Common economic indicators. These indicators show the overall health of an economy and can affect asset prices. Gross domestic product, GDP, measures the total value of goods and services produced in a country. Unemployment rate, the percentage of the workforce that is jobless but actively looking for work. Consumer Price Index, CPI, measures changes in the prices of consumer goods indicating inflation trends. Interest rates, set by central banks, they influence borrowing costs and stock market movements. Analyzing different types of financial news. Not all financial news impacts the markets the same way. Let's break down the different types of financial news and how to interpret them. Earnings reports and corporate news. When companies release earnings reports, they reveal financial performance, which can impact stock prices. If a company reports higher than expected earnings, its stock price may rise. If earnings miss expectations, the stock price might drop. Example, if Company X announces record-high profits, investors may rush to buy its stock, pushing prices up. But if it reports a failed product launch, the stock could tumble. Economic data releases. Government agencies and central banks regularly publish economic reports that influence currencies, stocks, and bonds. A strong GDP report often leads to a stronger currency and higher stock prices. A high unemployment rate could signal a weak economy, causing stocks to drop. Rising inflation, CPI, may prompt interest rate hikes affecting Forex and bond markets. Example, if the U.S. Federal Reserve announces higher interest rates, the U.S. dollar might strengthen as investors seek higher returns. Political events and policy changes. Government decisions and global events can shake the markets. Business-friendly policies often boost stock prices. Trade wars or sanctions can hurt markets. Elections and political instability create uncertainty, affecting investor confidence. Example, a new president promising tax cuts may lead to a stock market rally, while a trade war could send markets tumbling. Market trends and analyst opinions. Market trends help traders understand long-term movements, while analyst opinions shape investor sentiment. A bullish prediction on tech stocks might push more investors into the sector, driving up prices. If analysts downgrade a company, its stock price may fall as investors sell. Example, if analysts predict huge growth in renewable energy, solar company stocks may rise due to increased investor interest. How to spot fake news and market manipulation. Not all financial news is reliable. Some are designed to mislead traders and manipulate markets. Here, how to avoid falling for false information. Verify sources. Trusted outlets like Bloomberg, Reuters, and CNBC are more reliable than random social media posts. Check for official announcements. Major company news, mergers, earnings, etc. should appear on their official website or SEC filings. Beware of hype. If a stock is being promoted as the next big thing, it could be a pump and dump scheme. Avoid social media panic. Reddit, Twitter, and Telegram can drive wild speculation. Watch for market rumors. Fake earnings leaks or false bankruptcy claims can create unnecessary fear or excitement. Tips for interpreting financial news. Stick to reliable financial news outlets and official economic reports. Learn to separate factual reports from analyst opinions or speculative articles. Don't focus on one news report alone. Consider the broader market and economic trends. Diversify your news sources to get a well-rounded view of the market. Financial reports, like GDP and unemployment data, are released on a fixed schedule. Plan your trades accordingly. Some news reports might exaggerate information to attract readers or viewers. Focus on the facts and data presented. Common mistakes to avoid. As a beginner, you are bound to make mistakes when looking at financial news. To save you some trouble, here are some common mistakes you should avoid. Overreacting. Making impulsive trades based on a single news headline can lead to losses. Ignoring context. Just because one report is bad doesn't mean the entire market is crashing. Relying only on news. Combine financial news with technical and fundamental analysis for better decisions. Confirmation bias. Avoid searching for news that only supports your beliefs. Stay objective. Lesson summary. Financial news is a key tool for traders to understand market movements and economic trends. Knowing basic market terms and economic indicators helps in analyzing news effectively. Different types of news impact markets differently, from corporate earnings to economic reports and political events. Rely on trusted news sources and always consider the broader market context before making trading decisions. Avoid common mistakes, such as overreacting or trading based solely on news. The ability to interpret financial news is a vital skill for any trader. With practice, you'll become more adept at identifying trends and using market updates to inform your decisions. In the next and final lesson, we'll bring everything together and guide you through the process of developing a well-structured trading strategy.